back with the investment insights very shortly. Nucleus Wealth is an active and passive investment manager. If you like what you're hearing and want some help with your investing, we can do it for you via our active.
Hello, welcome to another edition of Nucleus Investment Insights. Each week we explore trends shaping stock markets, currencies, commodities, and global investment themes, giving you the insights you need to stay ahead. My name's Damien Klassen. I'm Chief Investment Officer at Nucleus Wealth, and I'll be hosting and sharing my insights and findings throughout the show. Don't forget to like and subscribe if you find our insights useful and want to make more of them in your feed. Now, let's get into today's show. So what we're looking at today is vaccinate or evacuate. So there's a quick disclaimer as well. Information you're hearing today is general advice in nature. It doesn't constitute personal financial advice. We've done this without taking into account your own personal objectives. If you do want personal advice, you can follow some links in the show notes to see what we can do for you. So so really what I wanted to talk about today was this idea of just going through my slides and making sure I've got the right one here to bring up for you. Sorry, I've brought myself in the wrong slide deck. Bring it back to this one. I wanted to talk about vaccines today. And the reason why I wanted to talk about vaccines is sort of this, it's an interesting part, and it's sort of a bit of a microcosm of your entire investment that's going on at the moment. So I've spoken before about the real divergence we have in terms of valuation within the stock markets. So if you look at the top 2% of stocks, very expensive, very high growth though. You're getting AI basically. You're getting AI, you're paying up for it, and that's why the market's really looks really expensive. Outside that top 2%, you look at across the whole most of the rest of the sector. If you cut out some of the stocks within AI and some other sectors that are sort of related, then actually things look pretty reasonable in terms of valuations. And so it's this real dichotomy between saying, look, do you want to get a portfolio where you just get anything that's not AI and you can buy it at a sort of more normal price, and you sort of just act like, well, I've got to not pay as much attention to the headline of the stock market, and really just pay attention to the stocks I've got, which you can buy at sort of more reasonable prices and things like that? Or do you try and chase the growth in the AI sector, and is that where the value is? And so why I wanted to bring this back was, when we look at a sector like the vaccine sector, keeping in mind that the stocks I'm showing you, actually, they're not 100% vaccines. A lot of them are sort of, about a third for some of the bigger ones, and running down from there. But it's a sector where you have Trump's policies, or at least his health, the head of his health department, actively sort of pushing back in terms of vaccines, and certainly seen as a very negative on this. The largest stock there in the sector, Pfizer, has certainly been hit very hard on the price front in recent times. And so if you look through this sector, what you can see is a lot of these stocks are trading on single-digit price to earnings ratios. And you're looking at even, and they're all sort of around that sort of 10 times earnings. And so very cheap relative to the rest of the market. I mean, the AI stocks are basically 3 times as expensive. You're probably going to pay 30 times plus for those instead. And so it's this idea about saying, look, is this a sector where you want to hide in? And so what I thought I'd do is sort of run through some of the issues within this sector, and then talk about how we're looking upon this and what we're doing within our portfolio, to try and get some exposure to the AI sector without going all out, and then how you're looking at different sectors and valuations within this. Okay, so I thought what I should do to start with, though, is talk a little bit about the background of of this sector, because it's not the same as a lot of the rest of the healthcare sector. So the key thing in my mind that needs to be taken into account is that what we've got is, it's this idea, you've got this social license really for these guys to operate. So a major incident back in the 50s when you had a whole bunch of different vaccine companies, sort of biotech companies, very similar to sort of the rest of the industry. But what happened was there was a polio batch. So this is called the Cutter incident. Polio batch went out to a whole bunch of people and just killed hundreds of people. It was a bad batch in terms of the production of it. And that sort of decimated the sector because all of a sudden, manufacturers were looking upon this as the risk return no longer sort of added up, and so people were sort of stopped, or companies really went out of business in that sector. And it's this idea between, vaccines are one of the interesting parts of the healthcare change, where the difference is you're giving it to healthy people. So the hurdle you face is much higher within this sector than within other sectors. And the difference, I guess, really comes back to saying, when the FDA and other health authorities around the world are looking at a new cancer drug, and it's for a cancer that proves fatal for most people that have it, or it's a rare disease that proves fatal for most people that have it, the bar needs to be is a little bit is a lot lower. It's basically saying, look, it's not just about does this have the potential to add to it, to add and increase people's lifetime, and there might be negative side effects, but look, actually there's a pretty major negative side effects from not fixing it, which is the people die, and so therefore the hurdles sort of less on other side effects. Whereas vaccines are different in that we're giving them all to healthy people, and so yes, you can avoid these diseases like polio or measles or whatever it is, but it's a very different look. It's a very different hurdle that you're facing. And so anyway, so the major thing that got done was there was a series of different legal protections passed in terms of making sure that it creates a liability shield for manufacturers, and basically in the end created effectively a partnership between these major companies and governments. And so we spoke about the sort of five or the sort of four major ones out there: Pfizer, GlaxoSmithKline, Sanofi, and blank on my Sanofi and Merck. They're sort of your major ones out there. CSL sort of sits there as well as a sort of a more regional player, I guess, within Australia, but the fifth out there, and then Moderna and BioNTech, sort of the new sort of mRNA ones, are sort of that sort of pretty much rounds out the sector. And so it's a very different very different sector to what you're looking at normally. And so the question sort of come back to saying, okay, we've seen this sector beaten down. Is this a buying opportunity, or is this actually something where the Republican Party, maybe this is sort of coming more from RFK Jr. within the US, is sort of look upon this as saying this is an opportunity to starve the beast. If they can make changes, say, to the legal coverage, if they can raise doubts within within the broader community, and that sort of drops the margins that the manufacturers can make, and potentially exposes them to higher liability. And so it sort of means that you end up, you don't have to sort of ban the sector and come out completely anti-vax, but you just sort of change a few things at the margin and claim it's for the public good, but you end up sort of creating that problem where these companies just start going broke or deciding not to operate in that space anymore. And so here's the question: is this a fundamental issue for Trump and his team, or is it just a bit of a side issue? Is he effectively using it as a mixture of appealing to the conspiracy theorists and also the backlash against I guess, large against government intervention. It sort of fits quite well as a theme within Republican circles to say, well, they're generally against too much government intervention, and so forcing people to have vaccines is, the ultimate government intervention, and so therefore should be against it. Or potentially, is this actually just another chance to get a bribe? Is this a chance to say, well, look, it's a bit like the Elon Musk and his whole Doge, and there's going to be all these major cuts, and then when push came to shove, no, actually there weren't any of the cuts. It was all, lots of smoke, but no actual fire behind it. And is there something similar here, where lots of smoke, you're turning around to the major drug companies and explaining they need to make contributions, and here's the whatever it is, here's the fund they need to contribute to, and if they can do that, then all these problems go away, and it doesn't go through. And so that's your sort of that's sort of the major thought process that's going through that. But there are actually lots of other things going on within this industry that's sort of worth talking about, and I'll jump to those in a second after this message.
We'll be back with the investment insights very shortly. Nucleus Wealth is an active and passive investment manager. If you like what you're hearing and want some help with your investing, we can do it for you via our active portfolios. Our tactical and core portfolios use the insights shared in this podcast to construct and manage your investment. We blend tactical portfolios to offer our combinations of international shares, Australian shares, government bonds, and cash. We vary the asset allocation with the goal of protecting your capital in times of market uncertainty. We also have active international and Australian share portfolios. These are chosen using our quality and value investment philosophy. You can find out more at nucleuswealth.com. Now back to the show.
Right, so what we're talking about now then is just the actual industry. So because the industry itself has got some sort of quite interesting things going on within the industry. One of them is this idea that effectively there's sort of two tiers of vaccines and vaccine or sales models for vaccines around the world. One of them is this idea that if you've got a poorer countries, and they often get serviced by the serum industry of India. So in India, there's a major biotech or pharmacology company that basically produces vaccines for very, very cheaply. So it's talking sort of $1 to $3, and ships that out to developing countries with the idea that it's actually better to inoculate large parts of the world. And then you have developed countries where, depending upon what the actual target disease is, typically might be $50 to $100 or more for the same dose. And so it's this idea behind saying, effectively, the production is really cheap for these. It tends to be a few dollars to produce these. So once you've got it, you can ship it out to sort of the rest of the world. But then the idea is, it's then how do you pay for the R&D that goes into this? And probably just as importantly, which is sort of different to a lot of the other biotech sector, is how do you pay for the actual production of it? And why am I guess, and when I say the production, how do you pay for the sunk cost of the factories and the regulatory issues that go into it? And the reason why I'm sort of focusing on this is because there is a significant amount more regulation that goes in, particularly in developed countries, into the production of vaccines versus a lot of other drugs. And it's the same process between saying, look, these are mass produced, they're going to be going out to huge parts of of healthy people. And so there's a lot more focus on the whole production side and a lot more regulation around the whole production side, which makes it more expensive. And what it means is it's very hard for a newcomer to break in, because if you'd like to start producing this, well, you're going to have to spend $1 billion building a factory. And then you're going to go through the whole government regulation process, and the government regulators are going to be against the new entrant insofar as they're like, well, we've got all these people we've been dealing with for 50 years who are producing this and have these really high standards, and we regulate them, and we know that when we give it to CSL or we give it to the GlaxoSmithKline or one of the Pfizer, one of these existing players, that they have these systems in place to do it. So a new person coming in, the hurdle's a lot higher to actually break into this, and that means there's actually a moat around these guys. And so what you're looking at is a sort of I was going to say semi-regulated, but it's more than semi-regulated. It's regulated assets that you've got in terms of the basic the trade-off between these companies and the government is, look, we're going to charge you more than what way more than what the cost to produce these. But we're doing that because we've also got these R&D budgets, and we've also got this very high quality production processes that sort of limit the number of errors that can happen. And so so the sort of tacit agreement is the governments are like, well, we'll pay you a little bit more for this, and actually not even a tacit. There's an explicit one for some of these where CSL is a good example where some developed governments sort of are basically paying CSL to have capacity that they're not using in case we do have pandemics, so that they can dial it up quite quickly and start producing more. And so lots of government support, far more government support in this sector, and far more of a relationship than what we see elsewhere. And it has tended to be along the lines of, in most of these, that the US pays more because, they don't have a single buyer. They've got a much more fragmented health system, and they've sort of built it up along those lines that, what might cost somebody in Germany, $60 to buy might cost $130 in the US. And so, and so you've got that part as well. Is the US genuinely serious about negotiating these drug prices? And Trump's spoken about it. And I think a lot of the stuff he talks about in terms of getting other people to pay and other people to pay more probably fits more for this industry than a lot of others, in that he's talking about we need to get people in Europe to pay more for these drugs, and we'll pay less in the US, and the net effect is that the same, the pharma companies will make the same amount of money, but it won't be the US sort of paying for the rest of the world. And that might be the case, but it seems far more likely that it's far easier for the US to sort of negotiate it down its own rates, I guess, to the same levels that what we're seeing elsewhere around the world, rather than it is for the US to force, say, Europe to pay more for these to pay more for these drugs. And so does that mean this whole sector is sort of facing this this down rating as what they get in the US sort of goes down, and they're going to have to gradually work up the margins over time. And as they renegotiate these deals, they've then got to turn around to Europe and start saying, okay, well, you can no longer give it to you for $60 and sell it in the US for $130. So the new global price is going to be $90, but they're sort of going to wait for those agreements, which tend to be relatively long term in nature. Wait for those to sort of start to roll off. So that's one threat behind it. So we're looking at these numbers and we're looking at these cheap companies, but the question is, is there a profit hit to come? And could it be significant in terms of saying, there could be, whatever, 20, 30% knocked off their profits. And so, yes, you can buy it at 9 times PE, but if your earnings falls by 20%, then, all of a sudden you're buying it more like an 11 times or 12 times earnings. So that's one part. Secondly, is this, and what the part of the reason for the big fall we've seen in prices in these companies is we're seeing genuine declines, and relatively significant declines in vaccinations within the US, and partly around this whole there's lots going on there. You've got the head of the health telling you that whatever it is, Tylenol causes autism, and there's all these problems with vaccines, and so therefore, and maybe your doctor's telling you the opposite, but it's clearly there are two people in positions of authority telling you conflicting things, and so that and the reason why this is important is because as I spoke about, these companies have this massive amount of operating leverage. You've spent what you've spent on R&D. You've spent what you've spent on your building your factory. your marginal cost of actually production is almost nothing, 50 cents or a dollar a dose or something like that. You're going to sell it for $100. And so therefore just small changes in your sales can make a huge difference to the profitability of them. And so that's sort of one factor that's sort of overlaying this sector as well. Secondly is, and then it comes back to this, you basically, there's this social license that's been given out there, and public trust is basically what the currency that these guys rely on. And so is that being damaged in the long term? So it's, is this something where RFK could be fired tomorrow and Trump puts somebody else in who actually likes vaccines or is much more positive on it? Does that mean that it all turns around quickly, or have actually you done lasting damage and you got to wait 5-10 years? We've got to wait for a reasonable outbreak of one of these diseases to actually hit before the pendulum starts to swing back the other way within the US. And so again, sort of an unknowable type of factor within that. So we've got that. So we've got the issues around sales. We've got the issues around revenues. And then the last issue popping up for a lot of these is this idea that, look, mRNA is this new technology out there. It's going to take a while to get there, but it is a new technology that sort of can have some issues for companies. So the future growth has got some issues. But I'll get into that in a little bit more detail just after this next message.
We'll be back again shortly. If you like what you're hearing but want a low-cost passive option, Nucleus Wealth is the first to offer passive direct indexing in Australia. The first generation of passive investing was index funds. The next gen was ETFs. Now direct indexing is here with significantly more customization and control. The benefit of direct indexing is you can add or subtract investment themes, and we have almost 100 different options to choose from. For example, you could buy an international share direct index portfolio that excludes fossil fuels and arms manufacturers and has a tilt towards cybersecurity and cloud computing. Alternatively, you could buy a portfolio with no screens and an extra exposure to nuclear power and defense contractors. You can find out more at nucleuswealth.com. Now back to the show.
Right. Okay. So now we're sort of looking at this sector and going, yes, it's beaten down in price. Yes, we've got some real risks in terms of margins. We've got some real risks in terms of social license within the US and revenues. And then finally, you've got this idea that you've got a new technology out there, mRNA, which the main benefit of mRNA over traditional methods in this is that it's much faster to develop. So you can do a lot more computer modeling, and you can get the changes can come out way faster than traditional methods of vaccination. So the benefit for that, so you can obviously see this benefit for it, and if it wasn't for COVID, you'd be looking at mRNA and saying, yeah, this is this real threat, but it's going to take a long time for them to build up enough support and enough enough to see what's going, enough to get the evidence to sort of convince people that this is going to that this mRNA technology is not going to cause more problems than it solves. And the reason why is because, as I said, first of all, we're giving it to healthy people, but the rates are really low. We're giving it to healthy people, and we're giving it to lots of healthy people. So hundreds of millions of people, and so quite small percentages of problems can cause problems to hundreds or thousands of people if this is the issue. And so when you're running a drug trial, usually what it is it's like, okay, we're running a drug trial on some rare disease. There's only a few, there's tens of thousands of people with this disease in the world. We've run it on a few hundred people. Well, actually the ratio of the number of people who run it on to the total population isn't too bad. And so we can sort of make some assessments and likelihoods about what's going to happen. The difference in vaccinations is, it's going to go out to hundreds of millions of people. And so you might be running it on, a few thousand people, but being able to extrapolate that out to larger populations is a lot harder. And so that's the real benefit from the issue with mRNA is we got to run it on this massive test because all of a sudden it was needed, it was rushed, and it was pushed through, rightly, wrongly. There's people who talk about the problems and that potentially part of what RFK is getting his platform from. About how fast it was rushed through, but the reality was it was rushed through, and now we have all the results to see, what the issues are, how widespread they are, and that then is this massive base that can be used for mRNA to really sort of push it forward and bring forward, what might have been a 10, 15-year process into maybe a 5-year process for getting it approved for other vaccines. The major one that's worth noting is not set up yet, but certainly they're looking at it, is the idea that they're basically trying to get a sort of 3-in-1 where it'll be COVID plus the seasonal flu plus RSV sort of all bound up into one injection. And so rather than getting sort of 3 different injections for that you might get at the moment, you can just sort of bundle it all into one and be, once a year, have your shot and you're done. And so the benefit from that, is it positives, negatives? There's obviously positive, negatives, but I think the big one is for given that a lot of these is from governments, is the purchasers or the major purchasers of these, particularly outside the US, is that they're much more likely to say, well, do I want to buy 3 things at $30 each, or can I negotiate to get them all in one and pay $60 or $70 for it? So, get that pricing benefit. So, so that's sort of the future we're looking at in terms of those. So really, as certainly as I'm looking at stocks, you sort of need to run some reasonable questions over what you're looking at. Do they have that? What do they have at risk from this mRNA? And that's where CSL in particular in Australia, it's got some stuff in the mRNA, but you'd say that it's probably one of the ones that's more vulnerable in terms of the mRNA. And it's also worth noting as well, CSL was looking at spinning off its vaccine division. Now it's talking about keeping its vaccine division until market conditions are better within that sector. And so, we saw CSL price down again because once they'd announced that, they weren't going to be going ahead with the further pushing in terms of that. Okay, so let's sort of talk through what that means as a big picture in terms of the investment view. So coming back to these stocks again, let me bring that chart up again just so you can sort of see the stocks, is that, apologies, right, is that we're talking about this as a microcosm for the rest of for the entire market. Do you want to buy a beaten down rest of the market that has either growth concerns? It might have, and in other sectors it might be issues about the economy and employment and all these other things. In this sector, it's issues about things that the Trump regime is directly doing against this sector. It's got some question marks on its sales, particularly in the US. It's got question marks on its margins, particularly coming from the US. It's got some issues, some technological issues. You need to make sure that you're investing in ones that might not end up being in evolutionary dead ends in terms of what the products that they're selling. And the flip side is you can pick these up for less than a third of, or you go to Pfizer, you probably would be a quarter of a lot of the stocks, maybe. There'd be a lot of the larger stocks trading on 32 times or higher. So, you can pick it up at a quarter of the cost. You get it at a 7% yield. Most of the rest of the sector you can get on at least a 3.5%, maybe a 4% yield or 5% yield, depending upon whether you're buying it, overseas or here. So yeah, it is it's exactly the problem you need to be looking at within your portfolio and making this decision for, one by one through the sectors is saying, do I want to pay up for that growth, or do I want to try and find, the beaten down ones and the ones that have been thrown out? Now, what are we doing within our portfolios? So what we've done is we've sort of tried to set up a So within our portfolios, we've tried to set up these sort of two or three different versions of the market. One is we've said, look, we do like the AI side, and we have, and particularly the profitable part of the AI side. So the guys that are actually genuinely out there making money and funding their capex from internal cash flows. So with those ones, we're sort of keeping a reasonable investment in that, and sort of we've ridden it, as it's sort of gone up over time. We've got a little bit of an exposure to the pointy end. A couple of stocks where, look, they're doing some pretty fancy stuff. The economics, or they might not be making the profits now. You've got to basically relying on a reasonable amount of growth. They've probably got a bit of debt that you're not quite sure you really want. But it's giving you a lot of leverage. If this thing extends for 18 months to 2 years, rather than all finishing up in the next 6 months, that you're actually going to get some real leverage from those stocks. And we think the upside downside is worth the risk, with a view that, look, if you get signs that things are changing, okay, now we've got to flip out of those stocks quickly. Okay, so that's what we're doing within that sector, is trying to get exposure without sort of buying masses of extremely expensive stocks. Within that, saying where can we get some reasonable exposure. Now, outside that, we've really been digging through and trying to find where are the stocks which we think have been sort of got some negative news. Potentially Trump's been targeting that particular sector, and you can sort of pick them up at cheaper prices. And so a good example of that was ASML. While Trump was out there talking about having to put new sanctions on China and what they're going to do to ASML to stop ASML selling to China and all these things like that. Share price got crushed. We jumped in, bought a bunch of them, and that's been been a great trade, up sort of 20-30%. There's another sector like the wind sector, and so we're looking at stocks within that. We've got a reasonable holding within that. Similar type of story, came out all against that sector. The stocks got beaten down. We jumped in and bought a bunch of them with a view that, look, they're at prices that you're just like, well, even if as long as there's not a sort of negative, he'll be in there forever, or you'll always have somebody there. You're sort of taking the view that eventually you'll have somebody who's more neutral on it, and just sort of, even if they just let the costs that stack up between it, is there still is investment going on within that sector. And so that's been another sort of reasonable winner for us on that. The vaccine sector is another great example. We're still nibbling around at the edges in terms of what the stocks we're having within that. But there's arguments within that to say, okay, it is a beaten down sector. It's cheap. If you see the end to the AI boom, and all of a sudden, these AI stocks are all of a sudden tumbling in prices, well, these things are already trading on 10 times earnings or below. There's a limited amount that prices are going to fall with this. If you can already get a 5% yield in some of these, or a 7% yield in Pfizer, and you have to sit out a few years of, prices tumble for a bit and you have to sit out a year, well, you're not going to be that upset. You're still getting paid for that, as long as you're not seeing those cuts to earnings coming through. And so, apologies. So this is sort of how we're thinking about putting together a portfolio, and I think that's where we sort of suggest that that others should be looking as well, in terms of saying it's about trying to work out how much exposure do you want to the expensive AI, and how you're positioning that exposure. And then the flip side is, what are you buying outside that portfolio, and what are the prospects? If you do end up in a continued AI boom, what's going to mean for the share price? Or if you flip back around and you end up in a situation where AI boom finishes and you start seeing prices tumbling in other stocks, are you in a sector of the market that can either hold up throughout that, or at least be looking at dividend yields that you're not going to be too concerned about while you're if prices happen to fall 10-20% and you sort of got to sit with lower prices for a little bit? If you're still getting those earnings and you can and that returns, then you can use that as a chance to reset your portfolio at lower rates. Right, so relatively quick one today, but I think an important topic worth considering. Just want to highlight, thanks a lot for tuning into Nucleus Investment Insights. I hope you found it helpful today. Give us a like and a subscribe so you don't miss future episodes. If you've got any questions, leave them in the comments. We'll answer them on our socials. Don't forget to catch us live for the next episode, Thursday, 12:30, where you can add in some. You can certainly pop in some questions there. Actually, I should note that I had a couple of questions from Regis here. I just wanted to thanks for your comments and thoughts within that. If you want to get more insights from us, visit our website, sign up for our weekly email to get the updates directly into your inbox. If you would like to build a personalized investment portfolio, you can head over to our website to start your risk-free account, send us an email or book a free consultation call with our team. Thanks everyone for listening, and we'll speak to you next week.